This video is for informational purposes only and is not financial or investment advice of any kind. Always do your own research before making any investment decisions, consulting qualified professionals if necessary. Have you ever wondered how to start building a crypto portfolio that could potentially grow your wealth over time? Today, we're going to break it down step by step in a beginner-friendly way. Cryptocurrency represents digital money secured by advanced cryptography, operating on blockchain technology, which serves as a decentralized, distributed ledger that records transactions across numerous computer nodes without relying on central intermediaries like banks. Bitcoin, or BTC, was created by the pseudonymous Satoshi Nakamoto, who released the white paper in October 2008 and launched the network on January 3, 2009, with the mining of the Genesis block. It remains the first and largest cryptocurrency, commanding around 50 to 55% market dominance and a market cap of approximately $1.2 trillion. Ethereum, founded by Vitalik Buterin in 2013 and officially launched on July 30, 2015, pioneered smart contracts that power decentralized finance, NFTs, and other applications, currently holding a market cap of about $400 billion. Essential concepts include decentralization, where no single entity controls the network, and consensus mechanisms like proof of work for Bitcoin and proof of stake for Ethereum following the 2022 merge. Note that 2023 surveys indicate about 70% of crypto holders lose money mainly due to insufficient education. Now, let's dive into researching coins. Never put all your eggs in one basket, as diversification is crucial for risk management. Aim for a balanced portfolio with roughly 60% in major coins like Bitcoin and Ethereum, 30% in established mid-caps, and 10% in higher-risk assets. Prioritize top coins by market cap for stability, such as Bitcoin and Ethereum. Then explore mid-caps including BNB launched by Binance in 2017, Solana from 2020 with high-speed capabilities, Cardano since 2017, and Polkadot from 2020. Steer clear of FOMO-driven decisions and instead scrutinize white papers, development teams, and practical use cases. For perspective, Bitcoin surged to a peak of $69,000 in November 2021 before plummeting to $16,000 in November 2022 during the crypto winter and FTX collapse on November 11th. Crypto markets exhibit extreme volatility, averaging 4 to 5 times that of stocks, exemplified by Bitcoin's 30-day volatility around 40% versus the S&P 500's roughly 5%. Adopt dollar-cost averaging, or DCA, by investing a fixed amount like $100 weekly or monthly to mitigate timing risk, with backtests showing it can deliver 20 to 30% better returns than lump sum investing during bear markets. Only invest money you can afford to lose, generally 1 to 5% of your net worth, and implement stop-loss orders at 20 to 30% drawdowns to safeguard your capital automatically. Embrace long-term holding, or HODL, given Bitcoin's over 200,000% growth since 2010, while being mindful of past downturns like the 85% crash in 2018 and the 75% bear market decline in 2022. Utilize centralized exchanges such as Coinbase, established in 2012 for its user-friendly interface and insurance coverage up to $250,000, or Binance, the volume leader since 2017 with over $2 trillion monthly trading. For secure storage, choose hardware wallets like Ledger Nano S or X introduced in 2014, or Trezor also from 2014. These keep private keys offline, support over 5,500 coins, and cost between $79 and $149. Enable two-factor authentication everywhere. Adhere to not your keys, not your coins, and beware of phishing scams, with over 12,000 incidents stealing more than $4 billion in 2023. Track your portfolio with apps like CoinMarketCap or CoinGecko, offering over 200 metrics. Rebalance quarterly by selling outperformers and buying laggards to preserve allocations such as 60/30/10. In the US, all trades are reportable for taxes, usually via the first-in, first-out or FIFO method, so maintain records and keep abreast of regulatory updates. Start small, commit to staying informed, and always conduct your own research or DYLR. This video is for informational purposes only and is not financial or investment advice.
If you want more crypto updates, market analysis, and breaking news, hit the subscribe button and turn on notifications.